Welcome to Earnings Central. In this video, we'll break down Paychex's second quarter fiscal 2025 earnings. We'll cover key financial performance metrics and dig into insights from the earnings call. All right, let's go. Starting with top-line revenue, the original estimate for Q2 was $1.31 billion. The company actually reported revenue of $1.32 billion, surpassing expectations by 0.8%. This quarterly revenue also marked a 4.8% increase compared to the $1.26 billion reported in the same quarter last year. Moving to adjusted earnings per share, the original estimate for Q2 was $1.12. The company actually reported an EPS of $1.14, exceeding expectations by 1.8%. This result also reflects a 5.6% increase compared to the $1.08 per share reported in the same quarter last year. Now, let's dive into some additional performance metrics highlighted during the earnings call. First, Paychex reported impressive worksite employee growth in the high single digits, demonstrating strong momentum in their PEO and HR outsourcing businesses. This growth was driven by both new client acquisition and strong retention rates. Speaking of performance, the company's operating margin expanded by 60 basis points year over year, reaching 40.9%. This expansion is particularly noteworthy given the challenging economic environment and shows Paychex's ability to operate efficiently while still investing in growth initiatives. The PEO and Insurance Solutions segment delivered solid 7% revenue growth year over year, hitting $318 million for the quarter. This growth comes despite some changes in health plan selections, which we'll discuss more in a moment. Management Solutions revenue increased by 3% to $963 million, driven by growth in client count and higher product penetration across their HCM solution suite. This steady growth in their core business segment demonstrates the continued demand for their services. Client retention rates remain strong and notably above pre-pandemic levels, which is a crucial metric in the payroll and HR services industry. This high retention rate speaks to both the quality of their service offerings and their strong client relationships. Lastly, on the financial front, interest on funds held for clients increased by 15% to $36 million, primarily due to higher average interest rates and invested balances. This provides a nice tailwind to their overall financial performance. Now, let's shift focus to some of the key insights and takeaways from the earnings call. First and foremost, Paychex is seeing strong continued demand for their HR technology solutions, particularly in their PEO and middle-market HCM businesses. This demand is being driven by businesses needing to navigate challenging labor markets and rising healthcare costs. An interesting development emerged in their Florida health plan enrollment patterns. While overall insurance attachment rates increased, they saw more employees opting for lower-cost health plans and flat enrollment in their Florida at-risk medical plan. This reflects broader trends in healthcare cost management. The company's investment in AI is paying off, with over 80% of early adopters actively engaging with their new AI-powered platforms. They're leveraging their massive dataset of 14 billion data elements to provide actionable insights to clients, creating a significant competitive advantage. Their new Paychex Flex Perks platform, launched in September, has shown impressive early traction with over 100,000 client employees purchasing at least one product from the marketplace. This new offering helps smaller businesses compete for talent by providing access to affordable benefits and discounted products. Despite economic uncertainties, small business hiring remains resilient. While the pace of job growth has moderated, small and mid-sized businesses are generally optimistic, with hiring intentions in November reaching their highest levels since the previous year. Finally, Paychex reported strong sales pipelines across all segments, with particularly robust performance in their PEO business. Their contracted revenue in the PEO segment saw high double-digit growth, and client additions were also up significantly. These results paint a picture of a company that's successfully navigating market challenges while continuing to innovate and grow. The combination of strong financial metrics and positive business momentum suggests Paychex is well-positioned as we move into 2025. That wraps up our recap of Paychex's second quarter fiscal 2025 earnings. If you found this recap helpful and want to stay on top of more earnings reports from other companies, don't forget to subscribe. We've got plenty more quick and easy breakdowns coming your way from Earning Central.